Ladies and gentlemen, welcome back to the channel. We need to get into what in the world is happening again in the markets today. As I am looking at the charts, S&P is down about 0.5%. NASDAQ 100 QQQ is down 0.40%. As I said in the last video, there is a potential to really see to some degree a black swan event or a big kind of downside move towards the end of this week. What does that mean for AMC? And what do you need to know? First, let's start with durable goods orders. So durable goods orders, it looks like came in a little bit better than expectations. Let's go ahead and refresh this and see here. So durable goods orders came in at 0.2%. Consensus was negative 0.5%. Even though we're getting good economic data relative to what it could have been, yeah, markets don't like it still. That's because there's no win here. There's only an ultimate lose, because if inflation comes down to 2%, but the economy stays strong, then the Fed's not going to cut rates. They're going to keep raising rates. If the economy goes into a recession, then the Fed will cut rates. But what does that matter if you're in a recession already? It doesn't matter all too much. You've already hit the recession. So there's really a lose-lose here. Now, tomorrow you're going to get some data as well. The GDP growth rate, quarter-over-quarter, final estimates for Q2, initial jobless claims. You're going to get GDP sales, pending home sales, month-over-month, year-over-year, Kansas Fed Manufacturing Index, Fed Goolsbee, and you are also going to get Fed Jerome Powell as well. Fed Jerome Powell is going to be the most important at 4 p.m. tomorrow, but a lot of people are saying, hey, Powell's not going to say anything different. We just heard from him, so we'll see if he does say anything different or changes kind of verbiage. I personally want to see if he tries to walk back some of the recession kind of questions, right? Because he very clearly said you're going into recession. We need to see a recession. That's what Fed Jerome Powell said. If you really want to boil it down, that's what he said. So does he try to walk some of that back is the question. Now, if you take a look at the S&P 500 as of right now, I mean, you're in no man's land. You are falling quite a bit here, okay? And basically just free falling. The next level is that 200-day moving average, and it really doesn't look like you're stopping here. Now, this looks identical to the same week in time you've seen in 1987, right? I talked about this in the last video, but this is 1987, Black Monday. This is now. Literally, like, identical. As close to identical as you can get within a 40-year difference in time. That's insane, actually. So yeah, it's starting to look kind of like this moment in time for the S&P. So that could be more downside for the markets. That could be a negative thing for AMC stock. But I do think, again, AMC has something positive going for it, and that is the risk to reward in AMC. Heading into 2024, you don't want to be short on AMC. The odds that you make money short in AMC versus losing money, very low. Very, very low. You have a much better chance of making money in AMC stock right now than losing money, and that's simple. The stock's fallen a lot. It's not $50, it's not $40, it's not $30, none of that. You have $7 per share. If you short the stock, that's all you can make is $7 per share. If you buy the stock, well, I think it's safe to say AMC stock could easily surpass $14 per share at some point in the next 12 months. So just on that thesis alone, it doesn't make sense to be short in AMC. So that's my reason why I think AMC could have a strong rest of this week. But again, you never really know. Citi actually just came out yesterday. Well, this is coming out an hour ago. It says Citigroup recently reiterated its sell rating on AMC Entertainment stock with a price target of $4.75 per share. AMC stock fell on the news, but shares still trade near the $8 mark. Taylor Swift may be one of the company's only hopes in the near term. Come on, Swifters, we need ya. We need ya to go buy all the popcorn you can. Take some to go with you. Quite literally, though. It's not even a joke. Since the pandemic, AMC CEO Adam Aron has been in extreme survival mode, selling stock and debt to keep the chain alive while waiting for product. This has included rooting for small traders squeezing institutional short sellers. It has also meant selling more shares and resulting in the creation of ape preferred shares. It goes on to say what happens next. Adam Aron seems to have achieved his goal. AMC lives, but AMC stock is not the investment it once was. Before the pandemic, AMC Entertainment was a stable dividend-yielding stock with a $5 billion in annual turnover. Now it's a debt-laden operation with 20% less revenue, subject to the cost of new technology and more competition than ever from people's living rooms. And I hate that argument. If you have ever been to a movie, ever, anywhere, then you know there's obviously no similarity to watching a movie in your living room than the theaters. It's the atmosphere. It's the experience of that, right? It's the speakers, the sound, just everything. That argument is really overplayed at this point. They've been saying that for 20, 30 years, that people were just going to stop going to theaters because they could watch movies in their house. And movie going has stayed pretty flat. I mean, it's not growing, because who doesn't know about the movie theater, but it stayed pretty flat over the years. So I don't find that as a valid argument for Citi to go ahead and lower their price target. But yeah, I guess we'll see who ultimately is correct. We don't have any other news specifically on AMC stock, just the market selling down in incredible fashion. And when you do take a look at some of the things that are happening out there, right? Let's take a look at the 2-year Treasury. Stupid freaking camera. 2-year Treasury. It's up 3 basis points today. If you look at the 10-year Treasury, it's up 2 basis points today. Take a look at oil. Oh my goodness. Up about 4% on the day today. You are definitely seeing this spike to oil, and it is spiking big time now. Now, ever since 1945, you have always seen a spike in oil before a recession. You've spiked about 40% from $69 a barrel back here in June, now to almost $70 or $94 a barrel. So you've seen like 40% spike. This could be the spike right before a recession. Now, we've also talked about this plenty of times. The yield curve is uninverting. Here today, it's pretty stable. Actually might be inverting a little bit further today, because the 10-year Treasury is up 3 basis points and the 10-year Treasury is up 2 basis points. So the short end is rising more than the long end. What we've seen recently is the short end, the 2-year bonds staying around the same yield, whereas the 10, 20, and 30-year bonds have been rising. So when you get that, you get the uninversion, because if the 3-month is 5.2% and the 10-year is 4.5%, well, to get an uninverted yield curve, the 10-year would have to get above 5.2%, or whatever the 2-year is, or the 3-month bond is. Okay, so you're gonna have to make your way up to about 5.2%, give or take, to actually break above that and to get the yield curve to uninvert. On the 2-year, it is 5.11%. So if the 10-year hits 5.11% pretty quickly, you are within probably a month or two of a recession. As you guys know, when the yield curve does uninvert, well, that's obviously right before you go into recession. And you've started to see it, but you're not getting it too much as of right now. So we'll ultimately wait and see what does happen. We do know we have a looming government shutdown on October 1st. That's looking pretty likely here. Blue line is for government shutdown, and you could see obviously the search interest has spiked, whereas unemployment is not really spiking. So if there was one good thing you could say about a recession or about the labor market, it's the fact unemployment is not spiking. Hold on, let me see. Unemployment insurance, maybe. Yeah, nothing. Unemployment payment. Nothing. Yeah, so in the grand scope of things, let's actually take that off real quick. Yeah, nothing. Yeah, nothing. So unemployment search data is not spiking. That is great. I mean, that's better than seeing it spike if you are in the camp of the bulls, guys. So there is that. Those are the big stories that are really happening today. Let's take a look at some of the Ortex data, some of the specific AMC data, and then we'll go ahead and wrap up this video. AMC stock is trading at $7.76, down about 1.9% here on the day with a short score of 67. $175.21 million worth of short positions in AMC. Estimated short interest of free float at 11.2%. Keep in mind these numbers are not real, so we just go over them because why not? We've went over them for years now, and they've been fake the whole time, so why not? Why stop now? Okay, that's my thought process. Free float out on loan 13.82%, shares out on loan 27.34%, days to cover 1.96, cost to borrow 5.56%, and utilization of 55.58%. If you take a look at the cost to borrow fees anywhere from 3 to 4.3%. And that's because you haven't seen any upside volatility. And anytime you do, the stock just gets beaten back down. If you take a look, let's go ahead and pull up AMC. Another big story with the markets right now is the dollar that is continuing to rocket higher. I mean, look at this move the dollar has seen recently. This just makes an Apple or a Tesla or any other foreign, any other domestic company that does business in China or Europe for that matter, or Japan. It means that conversion rate hurts a lot more when you convert your dollars or your foreign currency back to dollars. You get a lot less dollars the higher this chart is, so that does affect company earnings quite a bit. Now with AMC stock, if we go ahead and pull this up, well, I mean, you're literally trading exactly sideways. Like there's nothing else to really say here. You are as sideways as you could possibly get right now. You're not going down, you're not going up. I think all things considered, when the markets are dropping this much, that is a great thing to be sideways rather than to continue to fall. And I do think that shows some degree of strength here in AMC. You can see the MACD starting to go up by quite a bit. We'll see if that continues. If we especially break out and go positive on the MACD, that could be, really good. But we'll just have to wait and see if that does ultimately happen. But not this terrible day so far. Down about 1.5% for AMC. That's a good day. So that's going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys enjoy the rest of your day, and I will see you in the next one.